In order to protect your profits and have a very specific point to limit your losses within Interactive Brokers, you can use a stop limit order to do so. And I'm going to show you how to do this here live today. Hey guys, Andrew Ferguson back with another video, a tutorial for Interactive Brokers, trader workstation on the desktop, showing you stop limit orders. Let's get into it. Jumping right into the trader workstation, we have a position here with Meta, which is Facebook for those of you who don't know. And we have 100 shares here that we are up $626. And we want to keep most of that profit. We have an average price of $113.49, so $113.50. If we pop into the charts, we can see that Meta has gone on a bit of a run. They kind of got dropped back down, but we want to lock in those profits at that 113.5 location. So right now it's at 119. We want to make sure we want to lock in a little bit of profit. Let's say we want to make sure we sell and lock in our gains at 115. So we still bank about $200 of profit. To do that, we can use a stop limit order, which gives us a couple things we need to do. So we want to go sell over here in the order entry. We want to go quantity position of 100. We want to pick from the order price, stop limit. And this is going to change things here. It's going to, instead of going for one thing or one kind of price input, it's going to give us two now. We're going to have two things to input in the stop limit. And what these things are, this is the most important part of a stop limit order right here. These two things. Number one, when we input the stop, this is the first thing you have to do. You have to put the stop in. This is the point at which the stock price has to drop to. And in our example, we're going to go to 115. Okay. And what we're saying at 115 is that once the price of Meta hits 115, it's going to trigger our trade as a limit order. Okay, it's going to trade it as a limit order. And if you guys remember, if we just switch this back to limit, a limit order is when you kind of pick the midpoint between the bid and ask. So you actually put in a position and the market tries to make a match for you. But in our case, we're going to do stop limit. So we're going to do that, but we're going to have a hard stop at 115 where this actually initiates. So it's not actually an active trade until 115 gets hit. Okay, and when 115 does get hit, we always want to make our limit a little bit less than what the limit or the stop is. So we want to go, if the limit's 115, because that means the market's moving in a negative direction, go from 119 over here down to 115. We have to leave a little bit of a buffer room. And if we leave a little bit of a buffer, let's say 114.5, okay, when you do a little bit of a buffer, it's saying that if Meta hits 115, a stop limit order will be triggered. And that means it's going to try to make a limit order at $114.50 to sell those shares, 100 shares at 114.50. If it can't do it at 115, it'll try to execute and fill at 115. But the very latest it's going to try to get to is 114.50. And if that happens, your shares are gone at 114.50. One kind of thing to look at is day versus good until canceled. You would click submit. And then your order would be entered after you check this stuff on the screen. Transmit that there, boom, it's in there, okay? It shows up there as an order. And keep in mind, when the market moves very quickly, a stop limit order will eliminate the risk of having a stop order, which you covered in the previous video, of just having the stop order initiated wherever the price is at. But you have to also consider that if the market sells off very quickly, like it just takes a crazy kind of downward spiral like that, or very even steep like that, you could miss the market altogether, meaning that this stop order will try to trigger. It'll try to hit that 115 and the 114.5, but it may miss if the stock market is going down incredibly fast. Now, it's very unlikely this is going to happen, but you have to understand that risk of using a stop limit order. But this way, we can go ahead, we can actually pinpoint when this gets triggered and what we want the limit order to be at that 114.5. Now, the other thing you can do with a stop limit order is also use it to buy or enter a position. Let's look at one here on Amazon, okay? Amazon has been beaten down lately on the chart. And what we want to do is we want to pick the point which we think that we can enter a good position in Amazon and actually buy some shares. So in this point, let's say it's right down at the bottom of this candlestick. If it hits the bottom of this candlestick at $85, it's right there now, just hit it again. If it gets back to $85, we want to buy some shares and scoop up a little bit of a discount. So what we want to do is go into our order entry. We're going to click buy this time to buy some shares. We're going to do the same quantity of 100. We want to go stop limit again. And now we want to get down to that $85. So if the $85 range gets hit, we're going to scroll down to it. Boom, boom, boom. 85 bucks right here. Okay. We're going to have a limit order. And this one, okay, this depends on what you want to actually pay for the share. So if you have a limit order of, let's say, $84.90, okay, if the price gets to 85 and your stop order is 85 and it triggers, it's kind of unlikely that the limit's going to be 84.90 going to get filled right away unless the market keeps moving down. What I like to do, I'm trying to buy, I like to actually put this limit above 85 and go 85.1. That way, the limit's going to be a little bit higher than the actual current price. And 10 cents isn't a big deal long term when looking at stock investing. So I'm going to put it 10 cents higher, and this will help the order get filled. But the other thing you have to watch for with this is that if you have a stock with low or little volume, okay, volume, remember volume in here or volume in your actual portfolio over here, you got to understand that there has to be volume shown. That if the stock doesn't have a lot of volume, it's hard for a limit order to be entered because there's not enough other people looking to make that same trade. Okay, so you have to understand the volume. And I like to target stocks with anywhere from 500,000 to 1,000,000 shares or more sold in a day, or transacted or buy or sold in a day. So volume matters, but this is going to tell us to go stop order $85. We will try to then buy 85.1 and buy 100 shares, good for a day or good till canceled. Let's do this one good till canceled. And then boom, submit. This all looks good. Override and transmit. And boom, we're not going to use the algo. We're not going to display this message as well. And now you're in there. And when it does kind of hit, it's shown on the chart as well with a green line. You can go ahead and rest comfortable knowing that you can automatically buy shares at that price automatically. It's programmed in there until good till canceled. So that green line is going to act as a kind of area where you're going to buy. And then you can go ahead, if you want to do that, and just actually make this very, very simple as you're investing. You could put the buy order in now. And if it does buy, you could then put it in order to sell after it closes and actually sell at these points up here or up here or up here, whether they kind of hit these lines before. And that's more in the technical analysis, but it can give you a way to kind of get in automatically and then also sell automatically using stop limit orders, a little bit more specified than a stop order. And you kind of eliminate some of the risk and get a very kind of defined price for your entry. Now, you guys know the difference between limit orders, stop limit orders, but there's one more I want to show you there, which is just a market order. And it's the kind of the quickest, easiest way to kind of buy and trade stocks with a market order. I'm going to show you this one on this next video right here. So stay tuned.